The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi, everyone. Basil Chapman. You're seeing for Tommy O'Brien. Terrible storm down in his area in Florida, and so I'm taking this hour. This is going to be a very important session because we had the CPI numbers come out. I believe it was 7.7. Most importantly, what we're looking at is the response. Remember, I don't care what the news is. I only care about the response of the market. Well, look at this. This is the USD JPY, dollar Japanese yen. Made that pattern that we call the dreaded H from a peak D top. And it's almost like it is even more than a one-to-one to the downside right now. It's down 2.6 at 143.76. This is a currency that is huge. Look at the dollar, the response in the dollar. Oops, where did I put that? Wrong place. Over there. The response in the dollar is down $1.02 at 109.38. And that's going to be an important thing because it's starting to break this very long-term uptrend line, and that's something that we monitor very closely. Look at the yields. The bonds are screaming to the upside, up almost 3 points at 122.5. This is a big challenge for the bears because this big move to the upside. Look, the E-mini is up 117 at 38.72. The Dow futures are 117. This is in a matter of 35 minutes. You're looking at YM. This is the Dow futures up 756 at 33,285. You're looking at the NQ, which is this is the E-mini NASDAQ 100 continuous contract up 459, 11,290. You're looking even at the RTY, which is the Russell 2000, up 61 at 1824. So let's just show you something else. So with gold up 26 points at 1739, and if it can close on Friday above this high that was made in the continuous contract at the 40-period exponential moving average back the week of the 7th of October of 1738.7, and we're at 1739 right now, 39.8. If we can close nicely above that, that says to me that we've got a trend change and we're now moving to the right where the prices should start to continue, should start a continuation of this rally that basically started last week in the 1620-ish area. So that's really important. Looking at silver, where that had even a better chart. This is interesting. Silver is in leg E at 21.79. It's up 0.46. It has been a better chart formation, but very often gold itself starts to pick up, and after a while, you'll find that gold actually has a better chart pattern. Yes. So, yes, I'm just waiting to see. I know Kevin Hincks comes on in a few minutes' time, and Tommy interviews him. I'm just waiting for that. I really want to hear what Kevin says because he has this big picture that tells you all the little details there. So within the context of what we're looking at now, look at the VIX index. And we've been talking about this on my show, the Tiger Technicians Hour, forever, that the VIX index has just been making lower lows and lower highs, mostly lower highs, but lower lows for sure, since the high that was made back in September the 28th at 34.88. Even the retest was lower than that at 34.53 on the 12th of October. That's when the market started its big move up on the 13th. And what we're looking at now, the VIX index, the fear index, volatility index is down at 23.63. So I'm going to just ask this, give me the name of his show. There we are. Okay. So, within that context, there are so many facets to this move. And what I've been looking at for some time is how does the We have to go to this over here. There it is. How does the XLF, the financials, how do they really, what happens in the financials? Because if I want to see the financials moving higher together with the IAI, which is this is for the general market, which is the iShares broker-dealer and security ETF. We are long a bank stock. We are long the IAI, the broker-dealer ETF for a couple of years now. I want to see these things moving to give me confidence to say that the brokerage area where the public is actually in the market are doing a lot of buying, and that's pushing up this particular area because that would be a vote of confidence on their side. And it's not what you hear in the papers, it's what you see in the marketplace. And as I say, let me just go to see whether or not there's been a big pullback so far. No, the YM is holding up at 70, at 33,310, up over 770 points. So far, that's a good sign. So within that context, what we are looking at here is how does the market respond going through? Because the first thing now is quickly short covering. Then what happens is a pullback, and then there's a rally because people who are looking to buy put in some buys. And then what happens is the next round of shorting comes in for those people who missed shorting at this particular time and say, oh, this is just perfect. I wanted a huge gap up, and then short. So the real market, I'm seeing the market today in at least three, the other one, the next one. So I'm looking at this and saying, I'm just typing here. I'm looking at this and saying, okay, first hour, and that's the hour after the 8:30 time frame, Eastern time, that's one period. Then you get the next period going to about 10 minutes past 10. That's where the new short sellers come in, new buyers, and that's where the real fight starts. But I would suggest to you my show is between 10 and 11. Going into the 11 o'clock time frame is really when the market is going to tell us this is for real. It's not just a trap. And from what I'm looking at here, I believe that this is in fact real, and that there's a lot going on. In fact, I was going to do this in my show at 10 o'clock, the Tiger Technicians Hour. I'll start this off right now. Look, wheat. Look how sharply wheat has pulled back. Look at soybean. This is continued. Look, holding quite nicely, but in the lower range. Look at corn, or corn, as we say here in the Boston area. Look at that down move. And look at the only thing really holding up very nicely is the SB, which is the sugar. Sugar is at a new recovery high in leg B, leg C. So I'm looking at this and I'm saying, well, we're looking at the commodities probably softening. I haven't done crude oil yet because crude oil's been pulling back. I think crude oil is in the lower range. So maybe the Fed is being helped because overall it's going to be very sudden when the slowdown occurs because of what's been done. And as 0.75 rate increases, that does a lot. I mean, we haven't seen anything like it. So maybe, and we'll ask Kevin about this when we get back, maybe what we're looking at is something that's a little different in that the deflationary aspect, just on the shorter term, has been a lot more severe than markets were anticipating. So with that said, one of the things that I want to look at here was what are stocks like Apple doing right now? Apple is up 5 at 140, just off the 134's retest. We'll be looking at this when we get back. And we'll have Kevin from Fast Market coming up. Kevin Hincks, I'm looking forward to that interview. Be right back. Basil Chapman sitting in for Tommy O'Brien.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks. Basil Chapman here. This is the Morning Market Kickoff, Tommy O'Brien's show. And always he has a wonderful interview Tuesday, Wednesday, Thursday with Kevin Hincks. And that is something I've been waiting for from Fast Market. Kevin Hincks and the team. Hi, Kevin. How are you?
Good morning, Basil. Good to talk to you on a day where we get such market-moving numbers.
So Kevin, besides the fact that there was a slightly lower number for the CPI, the actual response, this huge move to the upside, it can't just be short covering. Is there something going on, something that you're seeing and something that in your show today you'll be really focusing on? In other words, maybe a divergence or something that you were anticipating. Maybe the speed is something that is a little different to what was anticipated. What do you think the response, and how will you deal with this?
Yeah, Basil, I think your immediate reaction is the same that a lot of veteran traders are having to this number, which is the overreaction of this number. And for the Dow to be up 800 points and the NASDAQ to be up almost 500 points on this number is a bit of an overreaction. I called it overreaction theater is what we're doing today. And,
right.
You know, you can't ignore the move in the U.S. dollar. You can't ignore the move in the 10-year yields, and that will fuel stocks. And you can make a case, Basil, if you really want to try to connect dots, that the pivot narrative from Jerome Powell at least now has a heartbeat, because
Correct.
Inflation finally cracked slightly, right? This black cloud that's been hanging over the market for so long, it's still 7.7% year over year. The core is still 6.3%. But we got our first true break in inflation. And I think that's what this market right now is grabbing onto. At least the high-frequency traders that trade before the market opens, that's what they're grabbing onto. Now, will these percentages and this rally hold throughout the day? Basil, I have no idea. But certainly this move is bigger than I would have expected, and and bigger than a lot of people that watch the markets for a long time have expected, Basil.
So, Kevin, is there just the possibility, something that I've been speaking on my show, the Tiger Technicians Hour, I've spoken about this for quite some time, Because if you really look at, I went through this just a moment ago before you came on. If you're looking at wheat from that huge spike up in March, up into the 1400s, trading now at 814. If you look at soybeans, in other words, if you look at these different commodities, and if you look at crude oil, way off the high that was made earlier this year, is it possible, especially with the speed of the increase that the Fed has raised rates, that in fact the rug pull from inflation, even though I've always considered that once the Fed saw inflation coming, getting the inflation back into the bottle is really hard, because once it's out, it filters through the entire economy. But the speed, is that something that we're really looking at right now? And that's kind of what you're seeing today, is that it's just the speed that is really the issue.
Well, Basil, you know, because you've watched commodities for a long period of time, that commodities in times of crisis and uncertainty, commodities will go to the worst case scenario first, right?
Yes.
And then work their way off that worst case scenario. I saw it in the grains in the drought of 2012, right? They go to the worst case and then they never seem to end up there, but that nevertheless causes severe pain when they get there. So you're right. Grain prices are off their highs. Crude oil prices are off their highs. Crude oil is a little bit of a different story because, you know, the U.S. has been releasing SPRs for months now, and that's probably going to stop. So the crude oil story, the supply and demand there is a little different, but you're right. The grain prices have come down. Some of the premiums put in grains because of the war in Ukraine and possible disruptions, some of that's eased, right? Uncertainty has become less uncertain. They're still elevated. And, you know, food and energy in this CPI number, energy up 1.8%, food up 0.6%, and shelter up 0.8%. That's in this CPI data that just came out. But used cars and trucks, Basil, down 2.4%. Apparel, down 0.7%. Medical care, down 0.6%. So some things are coming down. Food and energy, though, both were up in this number, Basil. So it's going to be interesting how this plays out. Some, big drop, though, in used cars and trucks. That's probably inevitable, right? That wasn't going to last forever.
I was going to say, I looked at CSX last night. That's CSX rails. It's down sharply from the highs. It's still holding pretty well, though. Yeah.
Right. I think that Jerome Powell basically said the same thing that you just said, which the longer inflation stays, the more entrenched it becomes in the economy. And that's why he's trying to get it down quickly. Now, he got his first real move downward in some of the inflation data, significant downward, right? The headline from 8.2 to 7.7. But, boy, we still got a long way to go, Basil. But at least the pivot narrative now, which was dead a week or so ago, has a heartbeat.
Yes, it does. So you're going to have so much to talk about in your show, Fast Market, this afternoon. And, of course, folks, this is if you ever want to learn about options, I mean, this is free. This is just tuning in and listening, and the amount of information you get is it's phenomenal, really. It's like a book. So what are you going to be talking about this afternoon?
Well, we're going to look at, like Folio is going to do a presentation on Sam Adams, Boston Beer Company. They come out with earnings.
Sam, yes.
And then we're going to look at two of the big movers that we'll expect today. NVIDIA in the chip sector. Remember, that's hit new lows based on cryptocurrency. And Google Alphabet today.
Oh, you're going to have a full program. That is fantastic. And actually, I'm so impressed at the way the semiconductors have come off the low. They look horrible on a monthly chart. But the move from the October 13th low in NVIDIA, in the SMHs, it's quite impressive, actually, when you think about the backdrop.
Yeah, I mean, NVIDIA's up about $9 or $10 pre-market. So all these stocks are going to get a nice lift here to start the day. I'm looking at Tesla's up almost $15 to start the day. So a lot of these names that have been beaten up along the way, NVIDIA is going to be on the cutting edge, Basil, as you know, of everything semiconductors.
Correct.
But they can't hide from the overall sell-off in chips right now.
And, of course, on what's happened, I mean, when you talk about recession, they've been in a recession, the whole semiconductor industry, for a year.
Exactly right. I mean, they went from supply chain problems and can't get enough product out to now they've got inventory gluts. So they seem to have problems coming and going, but they're dealing with it. And NVIDIA, like AMD, is certainly one of the leaders in that sector.
So you're going to have a lot to talk about this afternoon. This is at noon. This is Eastern Time, noon, and it's called Fast Market with Kevin and his team. And they cover in great detail the possibilities and what you can do using options to at least be prepared for anything that can happen. So thank you so much, Kevin. Really looking forward to the show today, and have a wonderful day. Thank you very much.
Always nice talking to you, Basil. Thank you.
Thank you. Folks, we'll be back. This is Basil Chapman sitting for Tommy O'Brien, and this is Morning Market Kickoff. I'll be right back. Exciting session coming up. See you in a moment.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. Tommy O'Brien is when you say under the weather, he's really under the weather in terms of the storm that's down there in Florida. And I hope everybody's there. I hope everyone's good. Hope Steve is able to make it. I know I see Tom O'Brien around, so that he's on his side of that coast is so far, I guess he's surviving nicely. So we're looking at the Dow has just opened. It is unusual to see the Dow open up And within, what are we now? Within 2 minutes, within 30 seconds, we are looking at the Dow up 920 points at 33,426. One of the reasons why, and I was asked about this by a number of subscribers, is have you any consideration of going short? And I said, nope, we're remaining long. We've been long from just off the 10-13, the 13th of October low. And all I can say is that within that context, we got long the very next day. And we've added to that, we have 3 times long position. Within that context, I'm waiting to see what the Dow tells me. I don't want to tell the Dow what it should do. I'm here, I'm merely a morsel floating in the water, and I'm just watching this. And look at this. Yeah, I wanted to go, look at this trend line. If you got that trend line, we're about to hit this. It'll be 3-4 times hit. Uptrend line, I'll expand this in a moment. On the left here is my daily chart. Look at that. And in that, within that context, let me expand this a little bit so we can talk about it apples to apples instead of squinting away. So look, I'll go green. There's a Chapman wave inside track repellent zone. I make this red. Just trend lines. Everybody has trend lines. Every single brokerage platform has the capability of doing trend lines. Maybe you can't do the cup formation, the arch formation, but everything else you can do. And look at this. We went up to that the resistance in the Chapman wave inside. Maybe make it much bigger. Here we go. So this is the daily chart. I'm covering the weekly chart. I'm going to expand it. We've got left side, right side price time match from the 26th of August at 33,364. I used the arch of this H pattern right here at 30,454 back in early October as my fulcrum, the plumb line, to get the number of bars on the left to match the number of bars on the right. And what we're looking at here is it went exactly to that level right there on the 8th of November. 9th was a sharp over 600-point down day because, remember, what everyone's always expecting is not what happens in the market. Everyone's expecting a Republican sweep and that the market would scream to the upside. Well, it was a kind of a much softer landing, right? And then what happened was the market, in disappointment with some other things, of course, sharply pulled back, and now it's gapped up and it's made a leg F in the Chapman wave, right in the Chapman wave inside track repellent zone. And all that says is, within the context of making new highs, the MACD is the moving average is good, the 9 period is way over the 14, the stochastics pulled back a little but still strong at 86%, and I continue to say the on-balance volume is very disappointing. So it's not 100%, but it is. Price is the arbiter of a trend, and the price so far says I've gone to a new recovery high. Now that recovery high, put it into context with the market in terms of the weekly chart. Now I'm expanding this weekly chart, and let me just get rid of that. There we are. And now what we're looking at is, you see this Chapman wave inside. Remember, patterns are fractals of human emotion. Therefore, whether or not it's a 1 minute chart that we were looking at a little earlier on in the show. Let me just show you the 1 minute chart. Made a peak E right there in the 2 minute chart. The notation is peak F, I believe. Yeah, peak F in the 1 minute chart. And now we're pulling back sharply, making the 38.75 to 38.70 level just on a very short-term basis. Really important to hold. I think it was way overdone, the move to the upside, but it did go to the upside. So let's get back to what we're looking at here. In the daily chart, we went right into that resistance zone. But in the weekly chart, look at this downtrend. I'm going to do this with the YM because I've already drawn it in for months. I've had this, and I'm showing that the pattern of the number of weeks from one high with the cup formation going back to a lower high. That was the high back in April. Then it pulls back sharply, goes to the June low, and goes to that was the August 16th or so high with a doji candle right in the inside track repellent zone. But today, in a shorter time frame, in leg A, we've gone higher. The MACD is very positive. Stochastics not anywhere as close to being as good as it was when it ran up to the August high, but it is rallying. It's at 60%. I like over 80% to have confirmation. The unbalanced volume, this blue line, is still very weak. So we're looking, and I've mentioned this before, that in the selectivity of each sector, even in the gold sector, which is screaming to the upside, not all the goals are participating, and that's the whole thing about this particular the sequence of rotation through these different economic spectrums that we're looking at. For instance, with a 7.7, that's a fantastic CPI if that's what the number was, but it's good enough to say it was a surprise pullback. So what I'm looking at here is, how do we close today? And it's really important. I'll get into that a little bit more. I'd prefer to be talking more about it at 10 past 10 after, when I'm in my show, the Target Technicians Hour, because then we'll have this whole flurry and see whether this flurry is just too much exuberance. I know there are some people in the den that were looking to short the big spike to the upside. You had to have a wide stop. It's the same as this morning. It was incredible to see. Let me just go to that for the moment. Look, ES. Look, this morning, the E-mini, the low on Thursday was 37.55, 37.50 round number. The low today was 37.51.50. So what happened, and you can see this right here, when the Fed came out, when the news came out this morning about the CPI, let me show you what happened. Look at this. We were trading in the 37.68-ish area. Whoosh, it goes down to the 37.51 number, 37.51.50. And then, so any stop you had, I mean, I was so busy with my getting all my newsletter out and everything, the opening call, that I was mapping it out and everything, but I just didn't get my trade on, and I would have been stopped out because I have fairly tight stops. And look at that move. And then I would have said, oh, no, look at that move. It was up over 100 points, 122 points up right now. So the speed is the sum that's doing two things. It's saying to the general market, you have to have your positions in and hopefully have a decent leeway. For instance, yesterday we had a new position in a stock that covers things that are gifts during the holiday season. So that's Thanksgiving, and that's coming up for the Christmas season. And we got in on the sharp pullback, and it was trying to rally all day. But the market made it close at the low. And here it is up very nicely today, up 7% today. You have to be so selective. You can't just buy and hold and close your eyes unless you manage to get the outer perimeters at a bottom or at a top. I'll be back. Basil Chapman sitting in for Tommy O'Brien.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back. I'm just trying to do the Chapman wave notations on the 1 minute chart of the E-mini, but I want to go back. There's so much information here that we need to cover. So there's a good chance, just as I always say, that last hour of a move down or the last hour of a big move up is usually the following session. What you get is at least a give back of 20 to even 40% of that last hour. We've just seen that occur in spades. It's just unbelievable how we've done that to the upside now. And what I'd said is that the first part of the move is short covering. Maybe some people saying, oh, I've been waiting to buy, and they do some buying. It's mostly short covering, I think. And then what happens is you've got a new bunch of traders that come in and say, oh, wow, I'm shorting. And they get short. But this is where you get two things that happen. One is either they are 100% correct, and it's like an Eiffel Tower. It goes straight up and then straight down. Look at this. This is what I call the Eiffel Tower. Basically, in the weekly chart, you went straight up in the E-mini futures into the August high and then straight down. Looks like an uppercase A or an Eiffel Tower. But this is on a 1 minute chart. Then what I like to look for is where is the support? And in this particular instance, the whole support in the 3870 to 3868 area, that's going to be key. And if you can look at this, you're starting to slow down, you move to the downside, you're just under the 50-period moving average in the E-mini 1 minute chart, and you're trying to find some support here. Now comes the big test. Does it continue going down? And all the shorts are just patting themselves on the back saying, wasn't that perfect? Whoa. Just after the open, we shorted and now we're going tumbling. Or is this a period where new buyers come in and push it for a V-shaped recovery or a cup-shaped formation, trying to get back to the just missed 3,900 by 50 cents up into the 3890s? And we're at 3882 right now to say to the shorts, aha, you thought you were winning. We're winning. That's not the issue. If you look at the markets, it's the next hour after that, and then there's the last hour between 3 o'clock and 4 o'clock. That's where the fund managers are already putting money to work, either longs or shorts. So I don't want to do too much of that right now because that's more for my show. Tommy always discusses just beautiful terms. He discusses both the fundamentals as they relate to the technical. So let's just do this. Yesterday, I heard him talking about the VIX index. So the VIX index right now, this is one of the biggest moves in a single day that we've seen. It had a high today of 26.59. That was early in the morning when the market was just kind of trying to find its feet, trying to rally off lows, and it kept coming back, testing those lows. And then what happened is the volatility, which is counter almost always, not every time, but it's counter because it's the emotional volatility side of the market, the emotional side, but the price is the technical side, the result of the emotion. What we're looking at now is a move from 26.59 to 23.45. That's a 3-point move intraday in minutes. So my contention right here is that this trend line that we're looking at in the weekly chart is suggesting that on Friday afternoon at 4 o'clock, if there is a close, is at 23.64. If there is a close, it can't just be underneath it. It has to be significantly underneath it. Under 24.30. That would suggest that the number of times that this uptrend inside track propellant zone has been tested and now is fading as it had done, going to the lows that were made in July, going to the August low in the market, it would say that this particular pattern now is invalid. The more significant pattern going into the rest of November is more this arch formation. I'll draw it in right now. It just looks like an arch or an arc. And that would suggest that the market, even if it pulls back from this intraday high, is starting to see buyers come in. And my contention is that I'm beginning to see it in the way that the semiconductors. Now, I spoke to Kevin just a little earlier on, and we were talking about how the semiconductors were rallying off the August. Sorry, I said August. I mean the October low at 166.97. And in fact, when you think 166 and now trading at 204, that is a very good percentage, but it's done that before. So about eight months ago, I said, what if what we're looking at is that shortage, fabs are being built, all sorts of things are being built in the chip area. What happens if there's a glut? We haven't been speaking about the glut, but what happens if there's a glut? I think since chips are the oil, the crude oil of the 21st century, you remember everything ran on crude oil from the before the 1900s, but let's say all the way through the 1900s when Standard Oil back in 1906 had that antitrust lawsuit. So I think that what we're looking at here is that the chip sector, if those chips come down in price, it is going to help the automobile companies, and a lot of things are going to be improved. Every single thing that we do, excepting eating bread, revolves around the chip sector, the semiconductor sector. So what's going to happen if the chips are now they're abundant, they're everywhere. And of course, we don't know if the specific chips are the ones that are coming. Maybe the automobile chips are something different. But what if there are? We could see one of the biggest booms, one of the biggest rallies we've seen if your commodity price, meaning chips, comes down. That's going to help many areas. I'm just throwing that out now since I know Tommy likes to talk about fundamentals, so I'm throwing in what I'm considering a fundamental look at it. That doesn't mean to say that the stocks will rally sharply. I mean, advanced micro devices, this is a huge move to the downside. 164 back in November, down to the recent low in the 54 area. It's now 64. Having a really strong pop-up, up 7.5%. But look at that weekly chart. I think that this is telling us a tremendous story. And if this can relate to commodity prices, actually, they don't have to come down very much, but come down. If crude oil, here we are, CL. If crude oil can remain in the lower range, making possibly lower highs and lower lows in the monthly chart, doesn't have to go down all that much, but at least it's not going up. I think this is going to augur well. If look at the TLT, we haven't even done that today. The TLT had a huge gap to the upside. It made a low at a 91. I forgot to put that in. Did I forget to put it? I did. 91 something or other, 91, right there. 91.85 on the 24th. Let me just type that in. 91.85 on August. I think I said 24th. Did I say 24th? I think I said 24th, yeah. And look at that. This is a nice move. But you've got your cup formation here. You've got Chevrolet falling axe formation. It says that if it says that if yields can start to come down, let's go to the yields. Let's go to the TNX.X. Oh, I typed it on the chart. All right, this will give me a chance because I want to see what's happening in my triple yield chart. So while I'm getting my triple yield chart up here, and we were looking at the iShares of the Global Timber and Forestry ETF, plus the HGX, the Philadelphia Housing Index, we'll be back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
GFS, which is Global Foundries Inc., trading at 61.93, up 92 cents. In leg D, I can't tell you how many charts I looked at that were going to leg D over the last couple of days. Let me just real quickly, because I'm about to do my show in a few minutes' time, the Tiger Technicians Hour. So let me see if I can find. Can I lose that? No, it's there. There it is. In the Chapman methodology, we're always trying to identify the lowest low bar, then count each successively higher peak. We expect that at the fourth highest peak, peak A is the first, B is the second, higher peak C is the third, higher peak 4 is D. Other things can happen. You can have a sharpest move down. It can recycle to a brand new buy signal to buy mode, going to another 4 peaks higher. But E, F, and G, you'll never get an H. You say go all the way from A to G, and that's the core of the technique. Here we are in leg D in the daily chart at 61.84. The weekly chart is having a very strong move, A, B. That's a leg A, but under it you've got a leg A, B, C. So this is saying there's really good action here, but it's basically an IPO, so it's really hard to look at it historically. Basically, if it gets to the 65.50 area, That's a nice breakout. That'll be really important. And key support is in the 57s. So let me just do this real quickly. I wanted to go back to the volatility index and say, this is going to be a little bit of a clue today. It's down at the lows at 23.46. If by this afternoon, probably 1:30 is going to be very important. If the Dow is still up over, say, 560 or 620 points at that time, that's really good action. At any stage, if it suddenly pulls back, if the volatility index goes over 24.20, then probably that pullback is going to continue for quite a while for the day. But what's really important at this particular moment is that I want to see the Dow hold well. I want to see the S&P hold most of its gains because it's been lagging. Now it's getting close to the 39.11.79 high of the 2nd of November. So I'll talk a lot more about this when I do my show coming up, the Tiger Technicians Hour. Don't forget, this is Basil Chapman sitting for Tommy O'Brien. Market Kickoff is his newsletter is something very important as well. Check it out, and I will be back in a few minutes' time, both for the news and my show, the Tiger Technicians Hour. Have a wonderful day. Very exciting session.